Tata Steel that has come out with its Q4 numbers, and if you take a look at the numbers, largely inline set coming in. Revenue was slightly above, EBITDA and margins were in line with what we were penciling in at TT now. Now, the Indian overseas volume also saw a rise, but the realizations also fell. That was also expected, and also the Netherlands, turned profitable, but the UK continues to report losses. The net debt has fallen to 4% on a quarter-on-quarter basis, led by the working capital release. And if you look at the revenue, we saw an uptick of 5% on a sequential basis. PAT also saw an increase of 1,062 crores in the Q4 as compared to 1,300 on a year-on-year basis. But let's look at the factors that contributed to an uptick of 5% on a sequential basis for revenues. It was led by higher volumes despite the fall in realizations in the UK and the Netherlands business. So the lower coking coal consumption cost in India and Netherlands also led to, was a factor to watch out for. Also, CLSA came out with a note. They're maintaining a hold call with a target price of 145 rupees per share. They feel that the consolidated adjusted EBITDA was in line, but the standalone volume growth of 3% on a year-on-year basis helped by capacity ramp up and see the strength a bit positive for the company. On the back of that, Tata Steel was in focus.
Okay, Tata Steel in focus on the back of its numbers, but we also managed to interact with the management of Tata Steel, and they have delivered a mixed show, but we caught up with the CEO and MD TV Narendran on what lies ahead in terms of volumes and strategy to reduce the debt in the quarters to come by. Let's go across and listen into a snippet of that chat.
The demand is quite resilient in India, and at least as far as Tata Steel is concerned, we've never really had to export much, even in the past, and we don't need to do it today because we have very strong equity with our customers. We have a very strong distribution network. So I think we are very comfortable that any additional volume that we bring in, we will be able to sell in the domestic market. So this year we will have at least 1.5 million tons more to sell in India than we did last year because the Kalinganagar plant is ramping up. But we have a blast furnace relining in Jamshedpur, so that takes out some of the volumes. But net, we should have at least 1.5 million tons more to sell this year than last year in India. The net debt in end September, when we announced our results, was 88,000 crores. We've brought it down to 82,000 crores, 6,000 crores in the last 6 months. We expect it to go down further during this year as we get the additional volumes and if the margins stabilize at this levels or gets better. So I'm not giving you a specific number, but certainly we will see deleveraging happen more during this year.